You think debt is just borrowing money, but there's one kind of debt that grows in the dark, silently, until the day it swallows everything you own. Most people never see it coming, and by the time they do, it's already too late. Every year, millions of ordinary people take on what looks like perfectly manageable debt. A car loan, a second credit card, a home equity line. The bank smiles. The interest rate looks small. The monthly payment feels affordable. And that's exactly the trap. What they never show you on the contract is the real cost, the number that compounds quietly behind everything you see. It starts with compound interest, not the version they teach in school, the version that banks have been using for over 200 years to quietly extract wealth from borrowers. Here's the part no one talks about. When you take out a 30-year mortgage, your first 10 years of payments go almost entirely to interest, not to owning your home. You believe you're building equity. You're not. You're feeding the machine. For a decade, the bank owns your home far more than you do, but mortgages are just the beginning. The real trap is what happens when people add debt on top of debt, and the system is designed to make that feel completely normal. Credit card companies charge 20, 22, even 28% interest annually. If you carry a $5,000 balance for 5 years, making minimum payments, you'll pay nearly double the original amount. The minimum payment is not a kindness. It is a mechanism. It is engineered to keep you paying, just enough to feel like you're making progress, while the balance barely moves. And then comes the second layer of the trap, what economists call lifestyle inflation. As income grows, debt grows faster, cars upgrade, homes get bigger, the payments multiply. At this point, something dangerous happens. Total monthly debt payments exceed 40% of income. Economists call this the debt trap threshold. Cross it, and escape becomes statistically rare. History has seen this before. In the 1920s, consumer credit exploded across America. Easy payment plans, low monthly rates. The system looked healthy. Then 1929 arrived. People who thought they owned things on credit suddenly owned nothing. Banks called in loans. Families lost homes they'd been paying on for years because the system was never designed for their survival. The same pattern repeated in 2008. Subprime mortgages, adjustable rates, people borrowing against homes they couldn't afford, and banks packaging those debts and selling them as safe investments. 8 million Americans lost their jobs. 6 million lost their homes. Trillions evaporated. And the banks, most of them, were bailed out. The debt trap had sprung on an entire nation. But here's what nobody told you about 2008. The system recovered. The elites recovered. And then, quietly, the same mechanisms were rebuilt. Different names, same structure. Buy now, pay later. Student loans with variable rates. Medical debt marketed as manageable payment plans. The packaging changes every decade, but the math stays the same. And the math always favors the lender. Now here's the hidden truth that changes everything. The debt trap isn't accidental. It was studied, refined, and deployed with mathematical precision by people who understood exactly how humans behave under financial stress. They knew that humans are bad at understanding exponential growth, that we anchor to the monthly payment, not the total cost, that we feel richer when credit is available, even when it makes us poorer. Credit scores were introduced not to measure your trustworthiness, but to measure how profitably you can be lent to. A perfect credit score means you are the ideal debt consumer. The system rewards you for taking on debt and penalizes you for avoiding it. Try to live without credit, and you will find doors closed, apartments rejected, jobs refused. You are invisible without debt. And here's the most chilling part. The trap tightens exactly when you need help most. When income drops, debt doesn't. Interest doesn't pause for job loss, for illness, for grief. The meter runs on everything. The people who escape the debt trap share one thing in common: not higher income, not luck. They became aware of the mechanism before it became unmanageable. Awareness is the only real shield. Today, global consumer debt stands at over $17 trillion. The system is larger than it has ever been, and it is built on the assumption that most people will never look closely enough to understand what's happening. So ask yourself honestly, right now, what percentage of your income goes to debt payments each month? If you don't know the number, that's not ignorance. That's how the trap stays hidden. The system was not built to destroy you. It was built to keep you just comfortable enough to keep paying. The question is, now that you know, what will you do differently?